Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss consumer home purchase sentiment, home price peaks, and household delinquencies. Today is Tuesday, May 16th, 2023. I am Byron Lazine, and the Hot Sheet starts now. I just jumped into the live chat, and my apologies for those of you that showed up for the Barstool Sports debate last night. They completely wasted our time. They're scam artists. They lowered my mic. I haven't changed the settings on this microphone really ever since Bobby set it up. And all of a sudden last night, I'm assuming in the comments you guys can hear me loud and crystal clear today. But yet the minute we go on Barstool, a huge operation that they couldn't hear. My mic was not turned up and they couldn't get it up. So anyways, back to our normally scheduled program here every single day live on the Hot Sheet. Hit the thumbs up and let's jump right back into reality. Home price sentiment increased to the highest point since May 2022. This is the Fannie Mae HPSI. So they go out and they survey respondents, consumers. There's 6 components that make up the HPSI. And now we have April's numbers. Okay. The HPSI has now climbed 5.5 points to 66.8 in April. And this is the highest level since May 2022. So looking back on the last 12 months, consumers feel the best right now in the last 12 months about the housing market. You can see here we're not back to, October 2018 or August 2019 levels. Obviously, in 2020, we had a sharp decline as nobody knew what was going on. But the housing sentiment in 2021 and even 22 stayed well below the housing sentiment of any time between, say, 2017 and 2019, right? If we just draw a straight line here from 2017, sorry, not an eraser, a straight line, 2017, and here before the decline, 2019. This is all well above where we sat for home price or for housing sentiment, home price sentiment with consumers comparison to, post COVID, right? It was well below. Now we're inching back up on a sharp increase up towards even where we were during the COVID years. So highest level since May 2022. Let's break down the 6 segments in this study and take a look. There's so much packed into the daily download today, so make sure you grab it. I think there's 10 slides in the daily download down below. You sign up once, you get it every single day. It's absolutely free. And so many of these slides, I promise you'll be using this week as you talk to consumers, buyers, and sellers. You'll be able to email this out, send this out to people who are thinking about doing business with you to help educate them. Okay, so let's take a look first at the home purchase sentiment we just discussed. Here's a longer view of that. This slide is down below, just a longer term view. And we sat from 2013 to, again, 2020 at a higher point than we sit today for all of those years. That's the run up of the real estate market after the recovery. We did get down to 63 in 2020. We're above that mark now at 66.8, highest mark again since May of 2022. We increased 5.5 points from April, or in April rather. So from March to April. Okay, so now good time, and this is on nowbam.com. You can get this again down below in our daily download or just on nowbam.com. Good time to buy or good time to sell. In April, the net share of consumers say it's a good time to buy increased by 6 percentage points to negative 54%. Okay, so that's the net good time to buy. there's still 23% of respondents that say it's a good time to buy. 77% say it's a bad time. So 1 out of 4 buyers that you're meeting, that you're discussing, if you're a real estate agent, 1 out of 4 buyers believe in their head it's a bad time to buy. Now, I have a slide that's going to prove otherwise that we're going to get to in a little bit. You're going to want to grab this. You're going to want to grab the daily download to make sure you have this to educate buyers, okay, to make so that they understand that this is not necessarily a bad time to buy if they're thinking for the long term. It's all about their personal situation and digging in as the professional to that. All right. So 1 out of 4 believe it is a bad time to buy right now. Respondents who say it is a bad or good time to sell. Okay. Percentage of those say it's a good time to sell increased by 5 percentage points month over month to 23%. That's the net good time to sell, 23%. Overall good time, 62%. And overall bad time, 68%. Okay. Listen, it's a good time to sell if you've got another place to go. We know that with the inventory. So if you've got another option, if you have a second home, if you have a rental you can slide into, if you own apartments and you're going to move into one of your apartments, well, yeah, you can get a top dollar right now. It all depends on that personal situation, of course. Okay. Respondents who say prices will go up or down in the next 12 months. This is what your consumers believe prices will go. The net share of consumers who say home prices will go up increased 5 percentage points month over month to 5%. Okay, so you can see here that since really this time last year, nobody has believed home prices were going to go up. Now they do. They're starting to believe, and it's starting to tick up that respondents believe home prices will go up. So for home shoppers shopping right now, do you get a cheaper deal now or at the end of quarter 3 after we see month over month home price increases? And we know that CoreLogic and Case-Shiller and Fannie and Zillow have all reported that home prices have bottomed out. We showed some charts on that yesterday and past streams over the last month, really. Okay, so here's another indication to remind home shoppers that, hey, the consensus out there is that home prices have bottomed. The consensus on buyers in the market is that home prices are going up. That's going to be reflective in the way that they make offers. That's going to be reflective in the way that they're shopping for homes. The people that you're competing with for this home believe that tomorrow the price of the home is going to be more. Taking that into consideration as a home shopper who wants to be competitive in your bidding situation, it's going to impact your ability to win the deal. Okay. And so this education is something that home shoppers need to maybe make that step into a winning offer from basically just a good offer, right? And listen, you can still make a winning offer in this market. Let me know if you agree with this. You can still make a winning offer right now as a home shopper and lose if you're in that affordable price range in a lot of markets. When you're up against 30 offers and you make an absolute winning offer, you may still lose. The chances are that you won't come out in the one spot. Okay, that's just the reality there. You might be up against 5 fantastic offers and there's literally nothing that you can do. And agents, brokers, team leaders, preach patience in those situations with the home shopper who's in the affordable price range. It will break for them. Don't let them give up on the dream of home ownership. Don't discourage them and put them into a situation where they are now spending 3 years renting when they could have been owning, and they're going to be in that location for the long term. Okay. Continue to encourage patience. All right. Respondents who say mortgage rates will either go down or up in the next 12 months. This is a big one. Okay. How people feel about the mortgage rates. This month, net share of those who say mortgage rates will go down over the next 12 months, increased by 13 percentage points to negative 26. So we're on a swing up for people who believe mortgage rates will go down. Okay. Overall, 22% feel like it'll go down. 31% over the next 12 months feel like it will stay the same. 47% believe it will go up. Okay. Certainly, we get into there's different things that impact it. We've talked about it on the last few streams. We go into a U.S. Debt default situation, they're going to go up. Okay. We avoid debt default and we just have a normal recession in a receding market and an economy that's slowing down. I believe the 10 years is going to go down, and I believe mortgage rates are ultimately going to go down. Okay. Those are the two common themes out there. The debt default seems extremely unlikely. I know Janet Yellen was screaming from the rooftops again yesterday that we need to make a quick decision. That to me, I know Janet Yellen and Jerome Powell aren't supposed to play politics, but that seems like they're playing politics a little bit. Let's get this deal done sooner than later so the stock market doesn't freak out. I think the deal gets done. We avoid the debt default. And so the more likely scenario is that Jerome Powell gets his way. He breaks the labor market. We go into a recession. We have a slowing economy and mortgage rates come down and housing pulls the economy back out of said recession. Okay. So quickly, a couple more variables here. Employed resident respondents who said they are concerned or not concerned about losing their job increased 1 percentage point to 58% on a net not concerned. Okay, net not concerned. Overall, not concerned, 79%, 21% are concerned. Okay. If you listen to Jerome Powell, that number might go up. He wants to eliminate jobs. Okay. The net share of those who say their household income is significantly higher compared to a year ago increased 4 percentage points to 13%. Of course, this is despite all of the inflation that we are experiencing. Overall, 64% say it's about the same. Overall, 11% say significantly lower, and 24% overall say significantly higher. Now, buy versus rent. Respondents say the share of consumers who say they would buy a home if they were going to move increased by 2 percentage points to 69%. So this one here. I love this chart. Okay. 7 out of 10 people, if we're to move, say they would buy, not rent. Okay. This shows us how passionate Americans are right now about home ownership, about wanting to own where they live. If they were to move, 7 out of 10 respondents say, you know what? I'm going to buy real estate, not rent it out. Okay. That's good signs for the future of real estate. Now, if you want some more evidence of why it's not necessarily a disastrous time to buy real estate, have a look at the recent Lance Lambert chart from Fortune. The number of months that have passed since U.S. home prices set an all-time high. So we're talking about peak prices here. For instance, after peaking in May 1990, national home prices didn't set another all-time high until 37 months later in 1993. Okay, so that's bottom left of the chart. If you are watching and not just listening, you can see here that after 1990, the 37 months it took until we hit a new peak for prices. Okay. In 2006, you can see there was a little bit of a head fake here, but ultimately that's all it was a head fake. You did set another peak at the end of 2006 before prices ultimately did completely bottom out again. And then we had this big correction here. Okay. So you can see that this took a long time for us to hit peak prices again in, I guess that would be 2016. Okay. I can tell you exactly when that was. I believe it was 2016. So, November 2016 is when nationally we hit peak pricing. So really from 2007, call it, to 2016. Here at the bottom right, which my head is blocking, I'll move the chart over here. Here at the very bottom right, you see that we have the 8 months, the 7 or 8 months, depending on which study that you're looking at. 7 or 8 months of home price declines, or rather, just not setting a new all-time high, because last month home prices went up. Okay, so you've got 7 or 8 months in a row here where we haven't set a new all-time high for home prices nationally. This can last 37 months where we still see home prices go up month over month in a lot of these months, but don't necessarily set all-time national high like we saw from 1990 to 1993, where it took 37 months before we set an all-time high again. If that were to happen, I'm not saying that that's going to happen. I'm just saying if that were to happen, if it were to take 37 months before the next all-time high, then buying right now, getting a home right now as a home shopper, means that you'd be buying well below the next all-time high. If it takes 37 months and you see month over month increases, and then we set some new all-time high in 3 years, say 2025, the end of 2025, which, by the way, would be in alignment with a lot of these forecasters on where they're projecting prices to go, new all-time high at the end of 2025. If that were to happen, buying right now, you'd be sitting there in 3 years saying, I like the equity I've gained in only 3 years' time. So thinking long-term, showing buyers a chart like this, showing buyers also a chart that I've dropped into. It's not in today's daily download, but I've dropped into daily downloads in the past. This one here. You can email me, byron@nowbam.com, if you have not been signed up for the daily download, because this isn't in today's, and I'll just send you a quick email on this one. Just say decades chart, home price growth by months into the decade. You see here, the last 4 decades, home prices have gone up each and every decade. In the 90s, they went up over 30%. In the 2020s, we're up almost 40% already. And we're just into the 2020s. 2010s, over 40%. And the 2000s, even with the crisis, we were up over 40%. You see in the 2000s, went up over 80 at one time. Super unsustainable, obviously. And then back in just under 50. So in any decade that you hold real estate, single family real estate, you're going to be a winner. And then going back to the chart that we just referenced here, it shows you that right now we're in a time period where we're not at an all-time high. We will set another all-time high. We always do. And the longer that you wait, the closer you're going to get to that all-time high. The chances of buying now and maybe having an extended period of time before we peak again, looks like it could be 3 years. Okay. It could be, or more, right? Obviously the last one was a lot more. This is in 2008, by any means. But there you go. The number of months, here, same thing, same chart, but the red line showing us where home prices bottomed. Okay. So home prices, actually bottomed on that line there. And then, and that was roughly in 2012. And then it wasn't until 2016 that they exceeded the 2007 peak. Okay. So there you go. Another bit of evidence to help educate, to help home shoppers feel comfortable moving forward right now in this market. It can be discouraging. It's why having an expert in your corner, having that knowledge broker, as we like to talk about on the At Knowledge Brokers podcast, is so important to the home shopping process. What's important to our economy is tracking home delinquencies, household delinquencies. Bloomberg reports that U.S. households show signs of stress as new delinquencies rise. Okay, that headline could scare some folks. We're going to dig into it and show you exactly how this is different from 2008. When you see the word households and delinquencies, some people looking at mainstream media headlines might equate that to, 2008, houses are going into foreclosure. I'm just telling you the way people look at them quickly Let me know if you agree. They look at that word quickly, and that's what they're going to equate that with. Okay. Here's what's actually going on. U.S. households did show signs of increasing financial stress in the first quarter, with credit card balances not declining in the way they typically do to start the year, and delinquencies rising for most types of consumer loans. Most types, not all types. Households added 148 billion in overall debt, bringing the total to 17.05 trillion, according to a report released by the Federal Reserve Bank of New York on Monday. Balances are now 2.9 trillion higher than just before the pandemic. That's why we got to get inflation under control. And it's another reason why Jerome Powell shouldn't be trying to completely destroy the job market. The overall delinquency rate remained low by historical levels at 2.6%. But the share, and this is for credit cards, but the share of debt that became delinquent, meaning it was at least 30 days late, is rising for most type of loans, including credit cards and auto debt. Okay, so but the overall, not credit card, overall delinquency rate remained low by historical levels. Okay, so let's not completely get out of control here on this. Here's the chart to show you exactly what delinquencies by loan type look like. Okay, you can see that right now, really almost everything outside of, I guess, auto is lower than at any point in the last 20 years. Okay, credit card and auto are the two highs for 2023. They're a little, I would say they're both a tick higher than those years from 2013 to 2020. Obviously, everything dropped from 20 to 22 with the money printing machine, but they're kind of just back up in line with the 10 years before the pandemic for auto and credit card, where you've got, call that 6-7% delinquencies by auto and credit card type. Okay, HELOC. Okay, a HELOC is really about as low as it's ever been in the last 20 years. Okay, you had a slight increase in the end of 2022, and it's actually back down off of that. Student loan, we're talking all-time lows. I mean, we have never seen anything lower than this in the last 20 years. That's that green line. And now let's look at mortgage. They're showing a slight little uptick there. This is, again, according to the Federal Reserve Bank of New York. But mortgage well below any point in the last 20 years. Okay, I would like to go to, I would like to dig into mortgage here and go to a source that I absolutely trust, Mortgage Banker Association, reporting on May 11th. Mortgage delinquency rate in the first quarter 2023 declines to second lowest level since the Mortgage Banker Association survey has started. Okay, the delinquency rate for mortgage loans on 1 to 4 unit residential properties decreased to a seasonally adjusted rate of 3.5% of all loans outstanding at the end of the first quarter of 2023, according to MBA. Delinquency rate was down 40 basis points from fourth quarter of 2022 and down 55 basis points from 1 year ago. Mortgages are not in a 2008 situation. The percentage of loans on which foreclosure actions were started in the first quarter rose by 2 basis points to 0.16%. Excuse me. The mortgage delinquency rate fell to its lowest level for the first quarter since MBA survey began in 1979. Lowest first quarter since 1979. And the lowest quarterly rate overall. I don't know, 79 to 23. How many years is that? What is that? 44 years? 44 years, you get 4 quarters in a year, typically, times 4. So you're talking about 176 quarters. This is the second lowest quarter out of, say, 180 roundabout quarters. Okay, mortgage delinquencies and unemployment rate continue to track each other closely, with the unemployment rate in April falling back to a 54-year low of 3.4 set in January. This is where we need to watch out. I said this on a previous stream. Jerome Powell gets his way and he really breaks into that labor market and puts more people out of jobs. You will see delinquencies start to tick up. You're not going to see anything like this, not with the equity and the amount of cash owners we have out there. Remember, 4 out of 10 homes, actually over 4 out of 10, 42% of homes in America do not have a mortgage. Okay, it's a good number to remember. 42% of homes do not have a mortgage. For all the 2008 people, that's a great number. Right now, 3 out of 10 purchases are cash. Okay, so if you own your home outright, you're not going delinquent on it. I can promise you that. We're not going to this chart here on mortgage, we're not going to get anywhere into the 10-15% range on delinquency rates with where we are in equity right now. You can sell your home. Almost everybody in America can sell their home for more than it's worth, or I'm sorry, not more than it's worth, but more than they paid for it. So you've got a lot of equity and you've got a lot of people that just outright own this home in cash. Mortgage delinquency rate and unemployment rate right now are tracking side by side. This is different than the 80s and the 90s. You can see that really all of the last 20 years, the delinquency rate for mortgages and the unemployment rate tracked each other almost to the number. Okay, right now we're at 3.56 for all loans, total past due in the US. 3.56 are past due. Not a big number, by the way. And then you can see that the unemployment rate is 3.5. Even during COVID, they tracked each other essentially side by side. So if you do see the unemployment number go up, you'll likely see this past loan due amount go up, but we are at the lowest point we've seen since 1979 on mortgage delinquencies. More evidence that we are not walking into anything even remotely similar to a 2008 level. That Mortgage Banker Association report and charts are all down below for you in the daily download. Jody is from OKC, right? Or OKC. What's your thoughts on the forbearance loans? Forbearance loans, and we've talked about this in previous streams, they continue to decline. So I think there's a couple 100,000. It's not a lot. It's just not a lot. A couple 100,000 across the country of forbearance loans. Forbearance loans are not a big deal. And we've actually, with the job market being so strong, we've seen almost everyone in forbearance come back and make up-to-date payments. Dawn from Texas, our folks who took forbearance being courted in these 30-day numbers, and have they been washed out of the system? On the delinquency rate, are folks who took the forbearance, but previously they were actually being accounted for. Let me see here if that's still the case, which would inflate this number. So to Dawn's point, if you're including those 200,000 people that were in forbearance, and yeah, they are, they're accumulating, they're calculating them into that group, this group here. Okay. So the 200,000 people, or give or take 200 to 300,000 people that are in forbearance, are technically in this delinquent number. And we've seen people in forbearance, to Jody and Dawn's point, we've seen people in forbearance come out of forbearance because the job market is strong. So that would indicate that this number of delinquencies is even lower. Okay. Forbearance is like, okay, I'm taking a forbearance to have a moment in time here to catch a breath. We saw that really a big number of forbearances in the beginning of COVID. In that first year, it's a really small number now, but it does add into this delinquency rate. Okay. Let's take a look at where we're at on the 10-year today. We did see yesterday an increase in the 30-year as the 10-year went. We keep bouncing between the 6.5 and 6.7 range. Today, we've got a 10-year that is inching up once again. Unfortunately, we could see a 30-year fix that gets up to 6.75. I just think that the uncertainty right now with, okay, what's government doing with the debt default, what's going on, has got the market a little bit squirrely here. 30-year fix did go up to 6.67 yesterday. That's off of kind of sitting there for about 3 or 4 days strong at 6.5, give or take. And And listen, your local market, you might be able to get something a little bit lower. We've got the markets are all down on the open. The Dow's down 0.5%, almost 200 points. S&P's down, NASDAQ's down. So it's a down day. 10 years up, 30-year fix might go up. We might be looking at 675 on Mortgage News Daily's daily survey when it comes out later today. Okay, at 2 o'clock here on this channel, Nicole and myself are going to be doing a Real Word podcast. We're going to recap yesterday's diabolical debate. Of course, our microphones will be working. We'll spend a little bit of time on the admitted defeat from Barstool Sports. So if you didn't watch the debate, don't bother. It was insane. Go ahead and watch the Real Word today at 2 o'clock, which will be premiering on this channel. Please make sure you're subscribed. We're going to also dig into a couple more of the most trending topics. And then if, let me read Mark's comments. And I thank you, Mark. Appreciate that. This episode right here hopefully was impactful and helpful. Grab the daily downloads below. I think those can help a lot of educators in every single market as they're working through home shopper uncertainties right now. And if you want to become a better agent, click the BAMX link below to become a better agent. For the cost of a cup of coffee per month, if you sign up for the annual, we will show you exactly how to do just that, become a better agent. The link for BAMX is down below. We've got a private Facebook group, and we're doing live streams in that group on specific topics like Instagram, Canva, objection handling, and captions that can help your branding. Appreciate everybody tuning into today's hot sheet. Until tomorrow, have a great Tuesday and toodaloo.